Good morning, traders. Welcome to Wednesday of this beautiful week. Almost said Tuesday. Make sure to swing on over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to make sure that we know what the news is, what's going on, when it's going on, etc. That way we're not taken by surprise by anything. So looking at the news calendar for today, obviously we do actually have some news. Whoa! The big thing is at 10 o'clock. That's Jolt's job openings for October. Forecast is 6.3 million, previous is 6.436. Today's Wednesday, so we obviously have crude oil inventories. The forecast for that is negative 1.424 million. Now, one of the things that I like looking at when I'm looking at the crude oil inventories for you inventory traders is looking at the API report. And the API report can give a very big heads up in terms of what to expect. Now, that comes out on Tuesday. So if you go back to yesterday, you can see the API weekly crude oil stock came out at a positive, totally different, right? A positive 1.141 million, whereas the crude oil inventories are forecasting a negative 1.424. So it's this kind of split, right? Buyers and sellers don't necessarily agree on what is expected to come through today. So a lot of times that means that today will be a little bit choppy with a lot of traders placing their bets, basically trying to see where the inventories wants to go. Aside from that, though, there's not really much else. A bunch of small news announcements until this afternoon, which is a medium, I guess. 10-year note auctions. That's about it, though. So the news calendar, very, very quiet beyond the inventories and jolts. So let's jump in for today. Today's daily brief on, let's see, what is today? 12/9 of 2020. All right, first one up on the list is going to be the NASDAQ. And as far as the NASDAQ's going, I mean, realistically, I say going. I don't even know if that's the right word. It's not really doing anything. Very, very sideways. Kind of looks like a flag pullback, but it's always a little bit concerning when the after or the pre-market, whatever you want to call it, kind of looks like the bonds. You know, these candles are kind of separated from each other. You see how there's a bunch of spaces between the candles inside there? That would suggest that there is a lot of, well, a lack of volume in that zone because, well, otherwise it would bounce back and forth like normal, like this. So very, very low volume that we're seeing so far. And it does appear as though kind of like maybe a flag or a wedge that's coming near the end. So a breakout move up or a breakout move down. But the problem is it's right in the middle of the range. So location-wise, super awkward. What would be really nice is if we could get that breakout to the upside, hit resistance, and it would have to happen relatively soon, but we get the top of resistance at the channel. We also get the horizontal resistance. That would be a nice 1-2 punch to try to push the market back down. Just be careful going into the open because so far, I feel like every morning it's been a V bottom and then a reversal at some point today. So, you know, if it does flush, expect it to flush probably farther than you would normally expect it to. And then the reversal, expect it to reverse farther than you would expect it to. Similar situation over on the S&P, except the S&P is a little bit more range bound, staying a little bit more on the top, and it's you know, holding up here okay. It's mostly just a range. It's not really going up or down. They do still have an unfilled gap that's below the market that's just begging to get filled. What would be really nice is a quick trap underneath it and then see them pop right back up. But the problem for the S&P is that we're skipping off of the top of the channel, and there's not a whole lot of room to make it work. And to further make that problem even worse, if buyers can't hold 3700s, which is where that big shelf was, there's nothing. Right? There's nothing until like 3675. It's all open space down here. We do have a previous swing high acting as support, and the only reason normally I don't mark up just one naked level like that, but if we look backward, you can see respect, 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 respect. There's obviously something going on there. So when the market returns back, that will be a zone of interest. If it wants to go a little bit further than 3673, as far as the highs, I really don't know that I can do anything on the S&P way up here at the top of the channel. There's just too many red flags up here. It's pretty much short or nothing up here, and see if we can get a better price to long maybe a little bit later. Over on gold, we can see the wedge that formed relatively nicely, tried breaking out of the lows, and that break out of the lows ran into support, ran into support, ran into support, 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 support. We're still there, right? Price is still there hanging out, and we're forming higher lows. Everything is showing that the buyers are trying to take over here, except the proof from the buyers. And what I mean by that is a rotation back up and a higher low. We had the rotation up But when it came time to pull back, we have the higher low barely, but where are the bulls, right? If they're going to take this higher, they should be showing up and get this thing kicking off to the upside. So if the buyers don't show up and they're unable to defend this we'll just say 1860s area, then realistically, again, this is another one of those situations where there's not much to catch the market until way the heck down here at 1846.9. And that's a previous swing high into support. That's very weak. The next major level of support isn't until the lows at around 1832. So there's a big zone of interest, but it seems like the majority of the interest is quite a bit further down. That would suggest that buyers aren't necessarily interested in buying the trend way up here. They want to buy the pullback. And then there's crude oil with a wow, big pop to the upside, and then took a note from NASDAQ and V-topped and rotated all the way back down again. It seems like buyers are having a little bit of trouble here. Every time crude oil tries to break above this 46, 45, 45 has been a mess. But every time we try to break above these whole dollars around 45, 46, 44, 47, 43, right? All of those. They tend to be pretty big brick walls. And if we look at where that 46 mark is, it's an attempt to probe above the breakout really strong. Maybe it's a breakout pullback. Well, it's a little bit early. They might still bounce it back. They've got a chance, right? Buyers aren't necessarily to be counted out yet because the objective is the high of the channel. And the high of the channel hasn't been hit yet. So that is an open objective that's still waiting, and the most recent cycle is off the lows of the channel. So naturally, the top is the next logical point of interest. It came close, and it fell flat on its face. That might have just been one of those good enough scenarios. And, again, the buyers may be coming in on this dip, but if they're not able to hold here, there's not a whole lot of support below if it starts breaking through these 45s. And then swinging over to the euro side of things, and it seems like the euro had to stop at the moon to refuel a little bit. We're not having that meteoric rally to the upside anymore. It's just kind of going a little bit sideways. This would likely suggest that buyers who were buying over here anywhere, if there were longs anywhere inside here, right, then they're probably taking profit up here. This is a very logical point of interest to take profit. We've got a double top. There's obviously resistance. Sellers will be selling every time it comes back up towards those highs. Now remember, a lot of buyers weren't really able to ride this move. There was a nice pullback there, a nice pullback there, a nice pullback there, aggressive pullback here, aggressive. We finally had a halfway decent one. So this is the first one in a while where we've had that halfway decent pullback, and that's also trapping below that previous swing. And notice where the market is finding support. It broke down, popped right back up above it. Support, all through here, where it's just kind of bouncing off of it. Now, it is coming off the top of the channel, so it could very easily break down further, and that's definitely a possibility. And if it is going to break down, then gunning for the lows of the channel again. There is support smack in the middle at 1.21035, which could cause some problems, but realistically, we've just got a wedge kind of forming across, and they're trying to break out of the highs. They broke out of the highs directly into the top of the channel, and now we're seeing some profit taking. So this is kind of where the buyers have to show up or get out of the way. We're either going to break out higher and try to charge that 1.21765, or they'll try and then roll over. That's kind of where we're at right now in the euro. It's an either-or scenario. And then finally over on Bitcoin. Bitcoin had a big flush to the downside. Didn't quite go as far as I wanted it to. If you remember in I think it was the weekly or maybe it was the monthly, we were talking about getting a dip down into like the 16,000 still. It got close, right? 17,700s-ish. That's a pretty good pullback off of the top. Bitcoin tried pressing into the 20,000s, those all-time highs, rolled into a lower high, rolled into another lower high, and now we're breaking down through the structural bottom. Keep in mind, right, the first breakout of any wedge is typically the lower probability of the two. So given the fact that we're dealing with a wedge breakout that broke low first, that would likely suggest that this move down was really just to get a test of support before continuation back up. There aren't really many compensating factors down here. We've got some MACD divergence off of the lows. and I guess maybe some RSI divergence, but there's none on the stochastic, really. I mean, it's a bunch of weird ones inside there. And the CCI also showing a little bit. So, I mean, the bulls are definitely showing some context here. Buying way up here might not make sense, but a pullback down to like the 18,100s could. And then we've got that shot to continue back up towards like the 19,000s, 19,150s. That's going to be the next zone of interest to the upside. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. Enjoy the day. I hope you have a great one, and we will see you all tomorrow. Thanks.